Did we do essay 580, guys? No? Do you remember essays? Whatever essays we have done, do you remember what and all we have done? 200, what is essay 200? I want everybody to tell what is essay 200. In accordance with standards on auditing. What is essay 210? Agreeing the terms of audit engagement. Next what we saw, 200 series, that's all, only 2, correct? Next 700. 701. CAM, key audit matter. 705. 706. 710 is not done, correct? 500. 501. 501 for specific considerations. 505 external confirmation. What we saw in external confirmation? What is external confirmation? Who is giving the confirmation? Third party is giving a confirmation directly to whom? To the auditor. Directly, auditor is getting a confirmation from the third party, that is called as external confirmation. For that example, we saw debtors and all of that. Yes? Yes, please come. We saw debtors example and all of that. Please sit in first row. First row, waiting for you only. We saw debtors example, correct? For external confirmation, that means what? Directly debtors kittarde you are asking him to confirm the balance which is there in the client records. So how you will ask? There is positive confirmation, negative confirmation, all those things we saw. What is negative confirmation? Negative confirmation na maunam samadam. If he doesn't reply anything, that means it is yes. Can we use this for all the cases? No, only for 4 cases we saw when risk of misstatement is low and all of those things. Are you able to recollect? Yes. Are you able to recollect? Now see this example. Is AC on or not? AC is on. Now see this example. There is a debtor sitting in Pakistan. You asked your client, I want to get external confirmation from this debtor who is sitting in Pakistan. Client is telling, no sir, you cannot get a confirmation. Most of the time signal will not go to him. Understood? Nee call venuna panniko, ana signal pogadu, you will not be able to contact him. Somehow you called him. Somehow you tried some 10-15 times and you called him. After calling him, his wife picked up the phone. Whose wife? Debtor's wife picked up the phone and told, sir, last 6 months he is in coma. Can't help you, can't give you any balances, he is in coma. Now what should the auditor do? He is not able to get any external confirmation. Correct? Already Pakistan la irka, call e po matende. Suppose call pani ponalo, wife is telling 6 months coma la. What you will do? How will you trust this figure of debtors in the financial statements? You are not able to get an external confirmation at this place. What will you do? Other audit procedures. What if other audit procedures also you are not able to do? If it is material, why 705? Why will you modify the report? Only if there is a material misstatement, you will be modifying the report. Is there any misstatement here? Have you confirmed of any mistake which is happening here? You have just not been able to get any confirmation as to whether this transaction has happened or not, but management is promising and telling you, Amma mele satyama, I sold goods to him. Amma mele satyama, he is liable to give me that money. What can I do if he went to coma? This is a real transaction, management is saying. At some point, you are in a position to blindly trust the management here. Correct? Correct? You are in a position to blindly trust the management. At that time, you will ask the management to give you a promise in writing. So, he will give you something in writing called as written representation. Written representation. This is essay 580. Can you all say 5 times? Essay 580 is written representation. Go. Essay 580 talks about written representation. So here it is very clear who is giving the written representation to whom. Who is giving it? Management or those charged with governance will be giving the written representation to the auditor. Should I tell you that this has to be in written format? It is already telling you, the standard itself is telling you it has to be in written format only. Clear? Clear? Now, who is preparing the financial statements? Who is preparing the books of accounts? Management is only preparing the books of accounts, financial statements and everything. This books of accounts and financial statements, management is giving to the auditor to conduct the audit. Can I say that this books of accounts and financial statements itself constitute as written representation? Can I say that this itself constitute as a written representation? This is a 4-mark question. Can I say that this itself can be a written representation? Can this be a written representation? For people who are saying yes, just to see this, what is the written representation giving you? What is the written representation giving you? It is some kind of an evidence, correct? It is some kind of an audit evidence that you are collecting for which you are basing your opinion upon. Is your financial statements, books of accounts constituting audit evidence? Simple question. For people who said yes for this answer, books of accounts and financial statements, yes, they can be written representations. Why are you getting the written representation? The purpose of getting the written representation is for you to compile all your audit evidences for you to give your opinion. Here, financial statements, books of accounts, audit evidence aguma. Will this become the audit evidence? Absolutely not. This cannot become your audit evidence. Based on this financial statements or books of accounts, you will be collecting the audit evidences to check whether this is right or wrong. Correct? So, is this written representation by itself? Financial statements, books of accounts? No, this is not written representation by itself. Written representation is a separate paper by which management will write the words, I promise that this happened. This debtor is unable to give you any kind of a confirmation. So this really happened at this date. Appdin solli, management is giving you a separate letter in the letterhead of the company. That is called as written representation. Clear, guys? This is a 4-mark question given in your study material. Clear? Now, for what and all can you get the written representation? First point is, you will get the written representation for management's responsibilities. What is the management responsible for? What is the management responsible for? Management responsibility means in the written representation, he will be saying that I have fulfilled all my responsibilities, trust me. Appdin solli he will give a written representation. So what is the management responsible for? For the preparation of the financial statements, correct? If he has prepared the financial statements as per, why is this not coming properly? Preparation of the financial statements, if he has prepared the financial statements as per cash or accrual basis, he should always prepare as per accrual basis, correct? So he will say that my responsibility to prepare the financial statement was as per accrual basis of accounting because we are going concern and I have fulfilled all my responsibilities. He has to type a letter to the auditor. So, management responsibilities kaga he will be giving a written representation. Also about the completeness. Completeness means what? Completeness means what? What is the meaning of completeness? All the information, all the transactions, all the numbers which is relevant for this audit, that is, the books of accounts and financial statements are complete. There is nothing omitted in this. Appadiyen solli he will sign. It is just a wordings. Management will give the auditor saying, books of accounts, financial statements kudukrara. Adodu in the written representation he will give saying, these financial statements are prepared as per accrual basis of accounting, and all the financial statements and books of accounts are complete in nature. That means not even a single transaction has been omitted. Enna bill varudho ella billu I have translated into my books of accounts, and books of accounts everything has been translated to the financial statements. Appadiyen sollittu management will give a letter to the auditor. Clear guys? Clear? So this is the first part about management's responsibilities. The written representation will be made. The second part, this is the normal part. Normally, when I go for audit evidences, say I got an audit evidence also, but still I want a written representation from the management. Is that possible? I was able to call the debtor. I got the audit evidence from the debtor. Debtor also gave a ledger similar, matching to whatever the client had. Still, can I get a written representation from the management? Yes or no? Yes. If the auditor feels that it is necessary, even if he gets audit evidence, to have confirmation of this audit evidence, he can get a written representation from the management. So for what and all he will get written representation? Say for example, there is asset. Asset has been purchased for 1 lakh. Now auditor wants to know whether this company only has purchased this asset, whether the company only is using this asset, or is this asset purchased for personal use and simply put in the books of accounts of the company. It's possible, correct? Personal use, what they'll do? They'll put it in the books of accounts of the company and they'll keep claiming depreciation on that asset and all. So auditor wants to know whether this asset was purchased for the company only. What he can check for that? He will check the invoice. Once he checks the invoice, the name in that invoice, whether it is purchased for that company or not. Is he a fool to purchase it in the name of his wife and use for the company? He will obviously purchase it in the name of the company only. So name here is giving an audit evidence saying the title of this asset is with the company only. Correct? What is the carrying value of the asset? What is the carrying value of the asset? 1 lakh, depreciation 10% WDV. For this, when you are auditing, it is around 76,000. Is this real or not? This 76,000 real or not? Is he overcharging any kind of depreciation? All these things you will check. You will check arithmetical accuracy for here. You will check the invoice for here. Everything you are checking. But still for this asset, you will get a written representation from the management asking who is the title and what is the carrying value of the asset. Asset, two things you are asking. What is it? Title and carrying value. Title means who is the real owner of the asset. So title, carrying value means what is the value as of today. That is the carrying value. So two things you are asking regarding assets. Clear guys? Clear? Now going to liability. Why is it not writing properly? Now going to liability. Whether this liability has actually occurred or not. Whether it is a actual liability or whether this liability is for the future but still it is affecting my books of accounts. If it is for the future, where should it go? If it is for after 5 years only, I know. Where should this go? This should go to notes to accounts as contingent liability, correct? notes to accounts as contingent liability. So whether it is an actual liability or a contingent liability, as soon as you see, you will know to an extent, but just get a promise from the management. Or liability pathana, ask him to again write a love letter for you saying whether this is actual liability. If he has something disclosed in his notes to accounts, whether that is really a contingent liability or that liability has actually happened in this financial year or not. So regarding liabilities, two things you will be checking. What is it? Actual liability and contingent liability. For asset, title and carrying value. Third thing is, what is the accounting policy they have followed? If they have followed FIFO, why have they followed this FIFO method of accounting? When the whole industry is following LIFO, you are the only one following FIFO. Is there some reason for that? You give it in writing. That is called as written representation. Only in the middle, only in this part it's writing. Here and all it's writing. This is called as written representation. So first we saw asset. Asset, they'll be checking the carrying value and the title of the asset. Second, liability, you will be checking whether it is a actual liability or contingent liability. Third, you will be checking the accounting policy. What is the purpose of selecting this accounting policy? If there is any change, then what is the reason for that change? Everything in writing, you please get it from the management. Standard is telling you. Next, there will be lot of laws and regulations. Laws and regulations to be followed by the company. Correct? Various laws and regulations. Environmental laws, pollution laws. There are so many laws, especially for car companies and all. There are a lot of laws and regulations. As an auditor, will we be aware of all the laws and regulations which the company has to follow? Are we in a position to check what are all the laws and regulations applicable for them, whether they have complied with everything? Will we know that? We will know to an extent, but 100% we will not be able to know. Correct? So get a love letter from the management saying, I have followed all the laws and regulations which are applicable for my company in this industry. Appdin solli get a written representation saying he has followed everything. This is the fourth one. Clear? So all these things, will they constitute an audit evidence or will they support an existing audit evidence? Is this itself an audit evidence or are they supporting an existing audit evidence? Supporting an existing audit evidence. This itself is not an evidence. If there is the audit evidence, you will still get a written representation to support that audit evidence. If there is no audit evidence, then this written representation itself will constitute as an audit evidence. In normal cases, understand guys, normal cases, written representations are not. They will be supporting the audit evidence which you have collected from some other way. By inspection, inquiry, analytical procedures and all those things, you would have collected some kind of audit evidence. This is only a supporting document. But if you are unable to collect any kind of audit evidence in all the other ways, then this written representation itself will constitute your audit evidence because there is no other option left for you. Clear guys? Clear? Now, as an auditor, what is my duty? What is my duty as an auditor with regard to this standard? What is my duty? With regard to written representation standard, what is the duty of the auditor? He should ask for the written representation. Okay. He knows that something is wrong in this area, so he will ask for written representation. Is the duty over with just asking? Then next duty is, first is correct, you will ask for written representation. Next, what is the second duty? What is the auditor's responsibility with regard to this standard? First is okay, you're asking for written representation. Next, what you will do? He'll give some written representation. Correct? Once you ask, he has to give you something. He'll give you some written representation. Or he will say, get lost. I've already given you all the financial statements, books of accounts. Ishtathikku daily vandu love letter ketane irpa. For every item, how can I give you a letter? He'll ask or not. Yes. So if he doesn't give any written representation, what should the auditor do? If it is not provided, what should he do? Third, if it is provided, what should the auditor do? If the written representation is provided, okay, thank you, sir, or what should he do? He has to check whether this written representation is reliable or not. He has to do a reliability test, whether this written representation is reliable or not. Just by asking, okay, are you the title? Do you have the title? What is the carrying value? Is this a actual liability? Is this a contingent liability? All these questions you are asking. After that, what is your duty? First one you ask, after that you check whether it is reliable or not. Or for a specific thing, he has not given the written representation, then what should the auditor do? Come. What should he do if he has not gotten any kind of written representation? Excuse me, please sit next to darling. Very okay. If he has not gotten any written representation, what should he do? What should he do, guys? Directly 705. 260. First, he has to go and communicate. Now you are getting into the groove of auditing. He has to first communicate with those charged with governance. That is, SA 260 reference is given in this standard. Clear? After communicating, now he is not giving written representation for something. You already have audit evidence for something. Correct? Say for asset example itself will take. Asset title, you asked him to give written representation. Title of the asset he is refusing to give. He did not cover only this point. So you are getting a doubt and you communicated this point to the people who are charged with governance. Now, are you getting some kind of a doubt as to why only for asset title he has not given the written representation? So, the first audit evidence here, you are having some kind of a doubt. Correct? First title, you would have seen the invoice. You would have seen the invoice, or you would have called the supplier and asked whether this is a real invoice or not. Unnada first audit evidence here, doubt pada vekkaram because of he is not giving the written representation for that particular thing. Correct? So you are re-evaluating the integrity of the entire financial statements itself. Seri, asset mattum dhaan poi sollirukana illana matta items to edavadhu has he defrauded? You are getting some kind of a doubt. So first you will communicate with those charged with governance, and second you will re-evaluate the integrity. You will re-evaluate the integrity. That means what? First vaangna audit evidence liye unakku doubt varudhu. So you are checking whether the client has been honest throughout or not. You are re-evaluating the integrity. After everything, okay, just because you re-evaluate the integrity, after, yes. Yes. Management is not providing. TCWG is somebody who will govern. That means they are not involved in the day-to-day operations. They do not know what is happening every day in the organization. They will only set the benchmarks for you. In 6 months, this is your target. He will go for business development and all of that. First day, maybe he will give you tea, coffee, snacks. He will tell you this is the team. You please get whatever you want from this team, and he'll go off. He won't be in day-to-day contact with you. Who will be in day-to-day contact with you? Management is a person who is in day-to-day contact with you. So for anything you want, you will be asking the management only. For audit evidence, physical verification of inventory, let it be anything, you will be asking the management only. If the management is not cooperating with you, or management is not giving whatever you have asked, you have to complain to the principal. The principal is the person who is governing everything. So he is the person who is charged with governance. These are people like CEO, CFO, director. All these people are TCWG. They govern or oversee the operations which is done by the management and low level employees. Clear? That is why you first communicate with those charged with governance, and then you check what is the ethics followed, what is the integrity, you are re-evaluating all those things. Now coming to your weapon. Now coming to the weapon. What should you do with regard to the weapon? Here, what is happening? Is there sufficient and appropriate audit evidence? Is there sufficient and appropriate audit evidence? No, there is no sufficient and appropriate audit evidence. So straight away, you will give a disclaimer of opinion, considering you are assuming it is pervasive. Clear, guys? Are you clear? Now, there is the material misstatement, but there is no sufficient and appropriate audit evidence. So straight away go to disclaimer of opinion. Clear, guys? Yes. Now, till now, whatever we saw, I am coming from the top. Written representation is written in nature. This is essay 580 written representation. From where? From here, correct? From here only, correct? Who is giving the written representation? The management is giving the written representation to the auditor. Now, is books of accounts, financial statements itself constitute a written representation? No, this will not constitute a written representation. Were you hearing, Harish? Online you are hearing, you are also hearing online? No, you did not hear. Okay, fine. Now you listen, we are going from the top, right? So books of accounts and financial statements will not constitute as written representation. What we saw here, first thing, written representation has to be given for all the management responsibilities. Now you have to ask me one question here. I told you management's responsibility, preparation of financial statements, whether it is on cash or accrual basis, and the financial statement should be complete. This is what we saw here, correct? You should be asking me a question here saying management responsibilities ஏற்கனவே எழுதி கொடுத்திருக்கானே, எதுக்காக அவன் திரும்ப written representation கொடுக்கணும்? Did you get that question? Where did he already give the management responsibilities? Management's responsibilities, where did he already give? In the engagement letter. In the engagement letter, management responsibilities was already given. Correct? Did you all get that doubt or not? If you didn't get that doubt, please go home today and study essay 210. In that engagement letter, there is a specific para for management responsibility. Why didn't you ask me? You know the answer. Why didn't you ask? You are supposed to ask me that question. Management responsibilities. He's already gotten this in the engagement letter. So why is this necessary now? Let us see here. See here, engagement letter is prepared by who? Engagement letter prepared by whom? Prepared by whom? I told you in class. I told you it is prepared by others. Prepared by two people only are there, management or auditor. Who and all are saying management? Who and all are saying auditor? Everybody auditor. I told you, when you go for articleship, one of the first jobs you will be doing is preparing the minutes of the meeting and preparing the engagement letter. I told you or not? Yes, you remember that or not? How can you forget this? Engagement letter is prepared by the auditor. For the auditor, whatever he thinks is the management responsibilities, he is writing it in a paragraph and getting it signed from the management. Management will sign it and give it. Auditor will also sign in one corner. Management will sign in the other corner. Correct? But this written representation is something which is written by the management itself. Now see here, there is a possibility, there is a possibility that they did not read the entire engagement letter and they just want to start off with the engagement. So they just put to a signature and send it off. So here what is happening? They are not understanding of their duties completely. Clear? They are not understanding of their duties completely. At that time, if the auditor feels that they are not understanding of their duties completely, he will immediately get a written representation again of the management responsibilities. Clear? The second thing, one person came and signed, he read everything. Now this is an audit specifically for fixed asset. Okay, va? Fixed asset ka separate engagement letter is there. So fixed asset verification kaga this engagement letter is prepared. This is one part of the audit. So here they will write this fixed asset verification ki idu pannuvom, physical verification pannuvom. All the invoices we will be checking. We want 2 dedicated people to show us around and show all the fixed assets. So all these things will be given in the engagement letter. Fees, everything, management response, everything is given here. One person read word by word by word and he put his signature. He put his signature. Auditor is very clear. This guy knows his duties. Clear? What happened midway of the audit? This guy got promoted. He got promoted to current asset department. He is no more related with fixed asset. One more new guy is coming to this fixed asset. What will he do? Should he just follow the engagement letter or should there be another engagement letter with this person? Why? Engagement letter is with person in the organization or the organization? With the organization. So how many engagement letters you will be putting? Every day one new person is coming. Every day will you keep preparing an engagement letter? Be practical. That's not possible, correct? So if somebody moves to another department or if the person in charge is not available right now, a new person has come. In that case, get a written representation from the management. You get a written representation from this person saying, I have understood all my duties. I will give all the complete information. All those things you get a written representation. Clear? First one, what we saw, he did not understand his duties itself. Second, what we are seeing, he understood, but he is no more in that position. He does not have any more responsibilities for this division. In that case also, written representation can be given. Clear? Now, next one. Engagement letter is prepared for 3 years. Why is this like this, guys? All faculties facing this problem? Yes, not only me. Okay. Engagement letter is prepared for, which color comes best? Which color comes first? Which color comes best? Who is that white color? Come and write and show me in white color. Come here. Who is that saying white color? You told white color. Come here. Yes, show me. Listen here, engagement letter. What was I saying? What was I saying? Engagement letter is prepared for 3 years. It is prepared for 3 years. It is a 3-year engagement. Same auditor for 3 years. It can be for 5 years period. Correct? So engagement letter is prepared for a period of 3 years. In this case, year on year, how do I know that the management is understanding its duties? So in that case also, I will get a written representation from the management. Clear? What are all the things we saw? First one, management does not even understand whatever is written in the engagement letter. In that case, I will get a written representation. Second, if somebody moves his position or no more he is responsible for whatever happens, then in that case also we'll get a written representation. Here, if engagement letter is prepared in one of the previous years and it is for 2-year period, 3-year period and all, then for every year no need to show him that engagement letter. Ask him to write a letter and give it to you. That is called as written representation. Clear? Clear? Now engagement letter is prepared for a company who is having 1 lakh turnover. Small company, turnover only 1 lakh, gross profit around 10,000, net profit 2,000. This is the company. Now suddenly this company got a government grant of 2 crores. Government grant of 2 crores. Now this company which was doing business of, say, vegetable business, now wants to get into grains, rice, pulses, fruits, everything. Now this company wants to get into all these items. Now what is happening? The previous engagement letter is prepared for this company. Now the nature of the business itself is getting changed. There is a change in circumstance. If there is a change in circumstance, no need to again revise your engagement letter. You can just get a written representation from the management. Clear, guys? Clear. There is also something called as addendum. There is something called as addendum. Have I already told you? Addendum means engagement letter is there. I want to change one para in the engagement letter. In that case, instead of scrapping that engagement letter, throwing it in the dustbin and making a new engagement letter, I will just add one sheet saying para number 12 is now modified as appadin solli I will give the new para. This is called as addendum. This is nothing but additional page I am just adding to the existing engagement letter. This is called as addendum to the engagement letter. Clear? Yes. Now what and all we saw? Why should written representation about management responsibilities be obtained from the management by the auditor? Why should it be obtained? First one, if the management misunderstands the duties, if he does not understand whatever is given in the engagement letter, you can get a written representation. Second, if the person who has signed has no more responsibilities, he does not have responsibilities, in that case also he will be getting a written representation. Third case, it is signed in one of the previous years for a cumulative number of years. In that case also, no need to again and again show him in his face, just get a written representation about his responsibilities. Fourth case, if there is any change in circumstances in the organization, in that case also, written representation can be brought. Are you understanding the examples? Yes, there are 4 cases for which written representation about management's responsibilities can be given. Second, this is the first one, written representation. This is the first one for management responsibilities. Second, to support existing audit evidence. For supporting existing audit evidence, we again saw 4 cases, correct? Assets, liabilities, accounting policy, laws and regulations. For assets, we saw 2 things. One is title and carrying value. For liabilities, we saw 2 things. Actual, contingent liabilities. Third point was accounting policies. Fourth is laws and regulations. Clear, guys? Now, what is the duty of the auditor with regard to this standard is, first one, he told, asking for the written representation. Second, checking for what? The term, reliability of the written representation given. Third, if he is not providing any kind of written representation, how should the auditor respond? So, response to reliability of the written representation obtained and response to not obtaining any kind of written representation, that is also the duty of the auditor. If he has not obtained the written representation, then what should he do? He should first go and communicate to people who are charged with governance. Second, re-evaluate the integrity of the audit evidence and the overall financial statements. அப்ப இது மட்டும்தான் தப்பா இல்ல மொத்தமா கொடுத்தது தப்பா அவன் சொல்றதை நம்பலாமா அப்படின்னு you will go and check. Third, you will use your weapon. You will give a disclaimer of opinion. Disclaimer of opinion means there is no sufficient appropriate audit evidence here. That means he has not responded at all. So you will be giving a disclaimer of opinion. Clear? Now, coming to the other part. What is the other part? He has given it, but you have doubts about reliability. You have doubts about reliability. In this case, what will you do? What will you do? External confirmation. What is external confirmation called? That is the real audit evidence, correct? External confirmation is the real audit evidence. This is only supporting your audit evidence. So what are you doing here? You are trying to get other audit evidences and you are checking if it is equal to whatever is given by the management as part of written representation. Correct? You are seeing the consistency. You did some kind of analytical procedure, ratio analysis, and you are expecting some kind of answer. You went with a mic and you inquired with knowledgeable person. You seek information with knowledgeable person. That is called as inquiry. You inquired and you got some answer. You did some inspection and you got some answer. Idellame same answer. But written representation varumbodhu, whether you are getting here or somewhere here, you have to check. Whether it is the same answer, whether it is supporting the audit evidence or you are getting something completely different, you have to check. After checking that, what will you do? Say this is happening. He is giving something completely different. Now what is happening here? What is happening here? Can you rely on this statement? Can you rely on this statement? No, you cannot rely on this statement. What is the meaning of reliability? Relevance and reliability you saw somewhere, these words. Relevance and reliability. Where did you see this word? You all have your summary notes in hand? Yes? Can you go to essay 500? Essay 500, relevance, reliability. 2 words. Did you with your own hand write on a book? Appropriateness. What is appropriateness? Audit evidence has to be sufficient and appropriate. Sufficiency talks about quality, quantity, and appropriateness talks about quality, which is nothing but whether it is relevant or reliable. Correct? So here, if you are saying that it is not reliable, can I say that the audit evidence given to me is not appropriate? Yes. So, if there is no sufficient and appropriate audit evidence, what is the weapon I have to use? Disclaimer of opinion. Are you clear, guys? The word they have used in this standard is only reliability. But reliability means the quality is not proper. Relevance and reliability we saw for appropriateness. Appropriateness means quality. Any audit evidence should be sufficient and appropriate. It should have good quantity and quality. Correct? So if the quality is being compromised, that means it is not appropriate. If your audit evidence is not appropriate, you will be giving a disclaimer of opinion. So can I say that in essay 580 written representation, it is always disclaimer of opinion in case something goes wrong? It is always disclaimer of opinion. Can I say that? Yes. I can say that essay 580 means if something goes wrong, I will be giving a disclaimer of opinion. Clear, guys? If he doesn't respond appropriately, that means there is no audit evidence itself. Then only comes sufficiency and appropriateness. So if there is no audit evidence, I have to give a disclaimer of opinion. If he gives the audit evidence, but I have doubts about the reliability, I will be checking with the other audit evidences, but whatever he has given is somewhere outside and it is not supporting my audit evidences. That means there is a material misstatement and it is the evidence he has given is not appropriate. The quality is not there. So if there is no sufficient appropriate audit evidence, I have to give a disclaimer of opinion. So in essay 580, if something goes wrong, the weapon used is disclaimer. Clear? There is no modifications here. Direct disclaimer of opinion. Are you clear, guys? Now, this written representation, I told you, will be in the letterhead of the company. Correct? It will be in the letterhead of the company. There will be something called as date in this written representation. Can this date be after the date of 31st March? 31st March, my financial statements are prepared. Will this date be before 31st March or after 31st March? After 31st March. All of you correct. This date will be after 31st March. Now, can this date be, say, audit report is dated on 1st June. Can this date be after 1st June? Can this date be after 1st June, after the date of audit report? Can this date be? Yes or no? No. Audit report kaprama, I cannot get the written representation. Say 1st June it is there. Can this date be 30th May? Can this date be 30th May? Yes? Yes, this can be 30th May or it can be 1st June. Can it be 1st June? The date of my audit report, the same date I have obtained a written representation. Can it be 1st June? Yes, it can be 1st June. Yes, it can be 1st June. What will happen here? Say he has done the audit report. Auditor has prepared the audit report. He has been asking for the written representation from the management. He has two audit reports. One is disclaimer of opinion and other one is unmodified opinion. He has both ready. He doesn't want to delay for this client. He is asking for written representation. If he gives the written representation on time, he will be giving the unmodified. If he does not give the written representation, he will give a disclaimer of opinion. In that case, it can be the same date also he can get the written representation. This is a case study. In the exam, இது ஒரு கேஸ் ஸ்டடி. என்னாச்சு, அவன் ரெண்டு ப்ரிப்பேர் பண்ணி வச்சான். ரிட்டன் ரெப்ரசன்டேஷன் வந்தா இதை கொடுப்பான், வரலனா டிஸ்க்ளைமர் கொடுப்பான். ஸோ சேம் டேட்ல ரிட்டன் ரெப்ரசன்டேஷன் வந்திருக்கு. கேன் ஹி அக்செப்ட் தட் ரிட்டன் ரெப்ரசன்டேஷன் அப்படின்னு வந்திருக்கு. Can he accept? Yes, of course he can accept. Till the date of that audit report, he can accept for written representation. So date of the written representation will be mostly near the audit report date, but it cannot be after the audit report date. Clear guys? It cannot be after the audit report date. Can we write the summary notes? Yes, 580 summary notes, or we'll go through the PDF once, then we'll go to summary. Can somebody open the PDF? This is a C category standard, small standard. So because of a big gap, I wanted to start with a light topic. Clear? All of you clear, understanding? Can somebody come and open the PDF here? Who opened their WhatsApp that day? Come fast. Come fast. Let's go through the PDF, guys. See if we have missed some point. What is the meaning of written representation? It is a written statement by the management to the auditor to confirm certain matters or to support audit evidence. It does not include financial statements or assertions therein or supporting books and records. What is the objective of the auditor? First one is to obtain the written representation. Second, to support other audit evidences. Third, to respond appropriately, to respond whether he has received it, he'll check the reliability, or if he has not received it, how should he respond? Written representation about management's responsibilities. This is the first part. Here, what are we seeing? Regarding preparation of financial statements, accrual basis and all of that, and whether everything is complete. Why is written representation about management responsibilities necessary? It is appropriate when people who signed the terms of engagement on behalf no longer have the relevant responsibilities. That means promoted to current assets department from fixed assets department. So he does not have the responsibility for that fixed assets. So in that case, you can get a written representation. The terms of audit engagement was prepared in the previous year. Any of the previous years, if it was prepared, then in that case, no need to again show the engagement letter. You can get the written representation from the management. There is an indication that the management misunderstands the responsibilities. அவன் சரியா படிக்கவே இல்லை அந்த engagement letter. So if the auditor feels that he did not understand his responsibilities properly, he can get a written representation. Or if there is any change in circumstances, suddenly there is a government grant, suddenly they are having a business expansion, in those cases he can get a written representation from the management for the management's responsibilities. Clear up? This is only for management's responsibilities. Management's responsibility will be described in written representation required about management. In the paragraph key, it should be given. Other standards, few other standards will give reference to this standard, saying in the madri case edavadhu nadandaduna, you please get a written representation. Till now, did we see something like that? Till now, did we see something like that? Did I say something about the standard in any other standard? Yes. Go back and check. SA 580 reference. Is it given in any other standard? In subsequent events, the first part, correct? The first part of the subsequent events, I told you SA 580 reference is there. We'll see in detail what written representation is about. Correct? The first part. So here SA 560 is specifically telling get a written representation. In that case, also get a written representation from the management. So now there are three cases. One is about management responsibilities. If he feels for those four cases, the auditor will ask for written representation. Second is, if any other standard requires specifically for a written representation from the management for SA 580, then the auditor should ask the management for a written representation. Third is for supporting any other audit evidence. For what and all you will be getting, for a selection or application of accounting policies, what is the carrying value of the asset, what is the title of the asset, aspects of laws and regulations, whether they have followed, liabilities, both actual and contingent. Either I have told us asset 2 points, liabilities 2 points, accounting policy and laws and regulations. Made it into 4 points. Clear, guys? The date of written representation has to be before the audit report date, not after the audit report date. It can be as close to the audit report date, but it will not be after the audit report date. Now he has doubts about the reliability. If he has doubts about the reliability, he has to check the effect of the audit evidence, and finally he has to use his weapon 705 disclaimer of. If the requested written representation is not provided, then discuss the matter with not management, TCWG, reevaluate the integrity of all the other audit evidences and the overall financial statements which the management has given, because you are getting doubt. Next, you will take appropriate action. What is the action? Here, reliability is not there means SA 500 reliability says appropriateness. Appropriateness means quality is not there. Correct? So, sufficient appropriate audit evidence is not there now. You will have to give a disclaimer of opinion. So, in the standard itself, if something goes wrong, you will be giving a disclaimer of opinion. Clear, guys? Yes? Shall we write the summary notes quickly and go to the next standard? Today, I will introduce the next standard also. Please write the name and the number. SA 580 written representation. சின்ன சின்னதா எழுது. You have to finish it in one side itself. குண்டு குண்டா எழுதாத. Be quick. Where is that one? Note went off. Did you write the name and number? Yes. Under that, please write written statement. By whom to whom? You write. By whom to whom? Ultava தயவு செஞ்சு எழுதி வச்சிராத. By management to the auditor. If you make a mistake here, you will keep reading this only again and again and again. For what? To give a confirmation on something or to support any other audit evidence. Here itself you put another hyphen and write another standards reference. Example, SA 560 first part. Yes, shall I proceed? Now what is the auditor's responsibilities? The left corner, right? Auditor's responsibilities. First one, to obtain written representation. Second is respond appropriately. Split this into two. Provided, if he has provided, what will you check for? Reliability. If it is provided, reliability, put a question mark. If it is not provided, it's easy, you know, directly. Yes? Now, first one, written representation about management's responsibilities. Sorry guys, I don't know if you can read it properly or not. Written representation about management's responsibilities. Split this into two. There are two parts here. What is it? What are the two parts here? Management responsibilities, you are getting a written representation for completeness and preparation of financial statements. First part, right, preparation of financial statements. In brackets, you can write accrual basis. Second part, right, completeness. Under this itself, Kuttiya write, why written representation about management's responsibilities? Why is this required? Under that, write 4 points. 1, 2, 3, 4. First one, signed engagement letter, signed EL, no responsibility, hyphen no responsibility. In the first part, write signed EL, hyphen no responsibility. Second part, previous year EL prepared. Third part, management misunderstands. Fourth part, change in circumstances. Clear? The first part, signed, the person who signed no more has the responsibility for that. The second part, year was prepared in one of the previous years, and the third part, management will misunderstand. Fourth is, there is a change in the nature of business, there is change in circumstances. In all these four cases, the written representation about management responsibilities will be given by the management to the auditor in written format. Clear? Second part. Now this is written representation about management responsibility, the first one. Now right here, second. In the second part, right, to support other audit evidences. To support other audit evidences. In that, right, the same way I told you, asset, split it into two, liability, split it into two, accounting policy. This way you will be able to understand. Study material para you will not be able to memorize it, but this one it will sit in your head. Asset okay 2 points, liabilities okay 2 points. Anyway 4 points are covered. After that 2 more points, laws and regulation, accounting points. That's it, simple. Asset 2 points, liabilities 2 points, accounting policy, laws and regulations. Please write here, don't just leave it like this, like a branch. Write here, carrying value, title, actual, contingent, right here. Done till here. Now put a line. Put a line. Now we are going to responding. How should the auditor respond? Now write respond appropriately. Split this into two. Here, if it is not provided, how you are going to respond? If it is provided, how you are going to respond? Clear? If it is now, first we'll finish the not provided part. If it is not provided, first you will discuss with TCWG. Second, re-evaluate the integrity. Re-evaluate the integrity. Next, you will be giving a disclaimer of opinion as per SA 705. Please write here, sufficient appropriate audit evidence is not there, so that you will remember later. Clear? Now, if he has provided, what will you check for? Whether it is reliable or not. You will check for the reliability. What is the effect on audit evidences? Whether it is inconsistent with other audit evidences, you will be checking. If it is unresolved, that means yes, it is inconsistent, then SA 705, disclaimer of opinion. Here also you write sufficient appropriate audit evidence is not there, and you circle this appropriateness. Clear? Are you clear? Appropriateness talks about relevance and reliability. So here reliability is not there means appropriateness is not there. So please circle the appropriateness so that you remember as to why it is a disclaimer of opinion. Are you clear? If you still want, here you write refer SA 500. Did you listen? In online. Hello, please sit here. Here. Please write here, refer SA 500 appropriateness so that you know இதனால தான் நீ disclaimer கொடுத்திருக்க. Clear? Did you really listen? Which standard? Last 5 minutes I didn't tell the standard name and number. Which standard? 705. Oh, you saw here 705 and you have told. If you didn't listen, you can very well tell you did not listen. He also told he didn't listen. At least we did a recap. Can anybody do a recap for him? Can anybody do a recap for the entire standard? Try, girls. One of you. Just trying. Recap. You can bring your summary notes also and give a recap. One of you, quickly. All of you reading the summary notes. Okay, take 2 minutes of your time. Read the summary notes and then one of you come. Come. Good. Bring your summary notes. You can see and tell. Yes. Quick recap. Please wear this. Yes. I'm going to put your beauty very well.
Now can I use this? Okay, so we were seeing 508. Oh, I don't know. Okay, we were seeing 508 written. Okay. Okay, ma'am. So 580 written representation. When something is like when auditor has to, sometimes there might be period, right, when auditor has to blindly trust the management. For example, if a debtor is in Pakistan and the debtor went to coma, the auditor cannot go and ask for a coma patient, right? So he has to blindly trust management. So in that case, the management should give a written confirmation, that is called written representation. Okay, and there's a small point whether BOA, that is books of accounts and financial statements, are written confirmation or not, and it is not, because it is just, are you listening to me? Okay, so it is not a written confirmation, since it is just அதை பேஸ் பண்ணி தானே நம்ம ஆடிட் எவிடன்ஸே கண்டுபிடிக்கிறோம். ஸோ அதனால அது கன்ஃபர்மேஷன் இல்லை. And when and where the written confirmation should be given, like எந்த டைமில் வந்து ஆடிட்டர் கேட்கலாம் அப்படின்னா, லைக் மேனேஜ்மெண்ட் ரெஸ்பான்சிபிலிட்டி, லைக் அவங்க மேனேஜ்மெண்ட் ரெஸ்பான்சிபிலிட்டி வந்து கரெக்டாக பண்ணுறாங்களா அப்படின்னு அவங்களே வந்து, மேம் கேன் ஐ யூஸ் தமிழ்? மேனேஜ்மெண்ட் ரெஸ்பான்சிபிலிட்டி அவங்களே கரெக்டாக பண்ணுறாங்களான்னு சொல்லி நம்ம செக் பண்ணுறதுக்காக. ஃபார் எக்ஸாம்பிள், இட் ஹேஸ் 2 பாயிண்ட்ஸ் அண்டர் இட். அதுதான் வந்து ப்ரிப்பரேஷன் ஆஃப் ஃபினான்ஷியல் ஸ்டேட்மெண்ட்ஸ். அப்புறம் வந்து இப்போ ஃபினான்ஷியல் ஸ்டேட்மெண்ட்ஸ் ப்ரிப்பேர் பண்ணது வந்து அவங்க கரெக்டான பேசிஸில் பண்ணியிருக்காங்களா, அக்ரூவல் பேசிஸில் பண்ணியிருக்காங்களான்னு அவங்களே கன்ஃபர்மேஷன் கொடுக்குறது. செகண்ட், கம்ப்ளீட்னஸ், வெதர் தே ஹவ் டிஸ்க்ளோஸ்ட் எவ்ரி திங், அந்த மாதிரி அவங்களே கன்ஃபர்மேஷன் கொடுக்குறது, தட் செகண்ட் பாயிண்ட். ஓகே, அண்ட் அதுவே லைக் ஒய் தே ஹேவ் டு கிவ் லைக் மேனேஜ்மெண்ட் ரெஸ்பான்சிபிலிட்டி அவங்களே எதுக்கு கொடுக்கணும்? ஆல்ரெடி என்கேஜ்மெண்ட் லெட்டர்லேயே நம்ம வந்து படிச்சிட்டோம், லைக் அவங்க வந்து அவங்களோட ரெஸ்பான்சிபிலிட்டி என்கேஜ்மெண்ட் லெட்டரே படிச்சிட்டோம். பட் ஒய் தே ஷுட் கிவ் அகெயின் அப்படின்னு கேட்டால், த ரிட்டன் ஷுட் பி ரிசீவ்டு ஃப்ரம் வென் லைக் மேனேஜ்மெண்ட் இஃப் தே டிடன்ட் அண்டர்ஸ்டாண்ட் properly. என்னன்னா engagement letter is prepared by auditor, okay, not the management. Okay, so maybe the management didn't என்ன சொல்றது, காதுல கேட்கல இல்லை வந்து புரியல அப்படின்னா he can like he can receive, அதாவது auditor can get WR, that is written representation from the management. Okay, the first point. Okay, அதாவது basically there are 4 points. அதில் தான் ஃபர்ஸ்ட் வந்து when the management didn't understand, Second, when the responsibility, the person who is holding the responsibility is no longer in the organization itself, or maybe he is changed to another department. For example, இவன் வந்து ஒரு இயர் வந்து சைன் பண்ணியிருப்பான், என்கேஜ்மெண்ட் லெட்டர் சைன் பண்ணியிருப்பான், ஆனால் இப்போ அவன் அந்த பொசிஷன்லேயே இல்லை, வேற பொசிஷன் போயிட்டான் அப்படின்னா he should be like he should know about the responsibilities again, right? So அந்த டைமில் வந்து his auditor can ask for written representation. Okay, third point வந்து the EL is prepared for previous years, like EL is for 3 years அந்த மாதிரின்னு சொல்லுவாங்கல்ல. ஸோ அதனால அப்போ திருப்பி வந்து ப்ரிப்பேர் பண்ணணும் அப்படின்னும் போது லைக் இட்ஸ் ஃபார் லைக் லாங்கர் பீரியட் அப்படின்னா திருப்பி வந்து ரிட்டர்ன் கன்ஃபர்மேஷன் கேன் பி ஆஸ்ட். ஓகேவா? அண்ட் லாஸ்ட்லி நேச்சர் ஆஃப் பிஸ்னஸ் இட் செல்ஃப் இட்ஸ் சேஞ்ச், லைக் தேர் சம்திங் லைக் நேச்சர் ஆஃப் பிஸ்னஸ் இட்ஸ் ஜஸ்ட் எக்ஸாம்பிள், சேஞ்ச் இன் சர்க்கம்ஸ்டான்சஸ், த சர்க்கம்ஸ்டான்சஸ் ஹஸ் சேஞ்ச்னா அந்த அது வந்து இப்போ ரிலவெண்ட்டாக இல்லை இந்த பீரியடுக்கு. ஸோ அப்போ வந்து அப்போயும் நம்ம வந்து ரிட்டர்ன் கன்ஃபர்மேஷன் கேட்கலாம். ஓகே, ஸோ அதுக்கப்புறம் லைக் இப்போ நம்ம பார்த்த பாயிண்ட்ஸ் வந்து மேனேஜ்மெண்ட் ரெஸ்பான்சிபிலிட்டிஸ் கீழே வருது. இதே வந்து வேறு எப்போல்லாம் வந்து ரிட்டர்ன் கன்ஃபர்மேஷன் கேட்கலாம் அப்படின்னா லைக் ஃபார் அசெட்ஸ் வந்து இப்போ வந்து ஒரு கம்பெனி வந்து அசெட்ஸ் வச்சுருக்குன்னா அந்த அசெட் உன்னோடது தானா, இஸ் இட் ரியலி யுவர் ப்ராப்பர்ட்டி, ஆர் லைக் ஏதோ ஃப்ராட் பண்ணுறியா எது பண்ணுறியான்னு சொல்லிட்டு இட்ஸ் ரியலி ப்ராப்பர்ட்டி அப்படின்றது அசெட். அண்ட் ஆல்சோ செகண்ட் வந்து வாட் இஸ் த ரியல் வேல்யூ ஆஃப் அசெட் அப்படின்றது, லைக் இஸ் இட் மார்க்கெட் வேல்யூவில் இருக்கா, இட்ஸ் த ரியல் வேல்யூவா அப்படின்னு சொல்லி இந்த ரெண்டு விஷயத்தை வந்து கன்ஃபர்மேஷன் வாங்குறது. ஓகே, இப்போ லைபிலிட்டி தேர்ட் பாயிண்ட். ஓகேவா? தேர்ட் பாயிண்ட் வந்து லைபிலிட்டி ஆக்சுவலி இன்னக்கடா, இந்த லைபிலிட்டி வந்து உண்மையிலே வந்து இன்னக்கட் பண்ணியிருக்காங்களா அப்படின்னு சொல்லி ஒரு கன்ஃபர்மேஷன் ஃப்ரம் தி மேனேஜ்மெண்ட் சைட். அப்புறம் வந்து லைக் வெதர் இட் இஸ் கண்டிஜென்ட், ஏதாச்சும் கண்டிஜென்ட் நேச்சர் இருக்கா அப்படிலாம் சொல்லிட்டு இஃப் தேர் இஸ் எனிதிங் சஸ் அபவுட் தட் contingency or that in a liability whether incurred அப்போ வந்து கன்ஃபர்மேஷன் வாங்குறது. அப்புறம் வந்து ஃபோர்த் பாயிண்ட் இஸ் ரிகார்டிங் அக்கௌண்டிங் பாலிசிஸ். ஓகே, இப்போ இந்த ஒரு அக்கௌண்டிங் பாலிசினா எதுக்கு அந்த அக்கௌண்டிங் பாலிசி, வாட் இஸ் த பர்பஸ் ஆஃப் ஆப்டிங் தட் அக்கௌண்டிங் பாலிசி அப்படிலாம் சொல்லி அந்த ரீசன் ஷுட் பி given by the management with the help of that written confirmation. And இப்போ வந்து the auditor may not know all the laws and regulations that should be followed by the management, right? So the management should by itself should give a confirmation, like நாங்கள் வந்து law and regulations regarding to our related relevant to our company வந்து நாங்கள் ஃபாலோ பண்ணியிருக்கோம் அப்படின்னு they should give the confirmation. ஓகேவா? அதுவும் வந்து ரிட்டர்ன் ரெப்ரசன்டேஷனில் வந்துடும். நெக்ஸ்ட்டு இட்ஸ் அ பேசிக் பாயிண்ட் தட் இஸ் ரிட்டர்ன் ரெப்ரசன்டேஷன் இஸ் ஜஸ்ட் அ supporting to audit evidence. Okay, audit evidence ku supporting da, but if there is no possibility of getting audit evidence now, the written confirmation itself is equal to audit evidence. Okay va? Next, duties of auditor la vandu first of all he should ask for a written confirmation. What are the duties na? Duties of auditor na first he should ask for audit evidence. Second, if it is provided the audit evidence provide பண்ணிட்டாங்க, audit evidence நான் அவ்வளோ சாரி, ask for written representation. ஓகேவா? அவங்க வந்து ரிட்டர்ன் ரெப்ரசன்டேஷனுக்கு கேட்கணும், ஃபர்ஸ்ட் கேட்டால் தானே கிடைக்கும், அது கேட்கணும். செகண்ட் வந்து ப்ரொவைடட், இப்போ வந்து அந்த ரிட்டன் கன்ஃபர்மேஷன் கொடுத்துட்டாங்க அப்படின்னா அதோட ரிலையபிலிட்டி நம்ம செக் பண்ணணும், இது நம்பலாமா அப்படின்னு செக் பண்ணணும். ஓகே, இஃப் இட் இஸ் நாட் கிவன் அப்படின்னா தான் ஃபர்ஸ்ட் யூ ஷுட் இன்ஃபார்ம் த என்ன சொல்கிறது TCWG. தென் செகண்ட் யூ ஷுட் நம்ம வந்து இந்த கம்பெனியை நம்பலாமா, லைக் யூ ஷுட் ரீஎவாலுவேட் த இன்டெகிரிட்டி ஆஃப் த கம்பெனி. ஓகே, ஸோ வெதர் இட் இஸ் அ குட் கம்பெனி ஆர் பாஸ்டில் வந்து ஏதாச்சும் ப்ராப்ளம்ஸ் பண்ணியிருக்காங்களா, ஃப்ராட் பண்ணியிருக்காங்களா அப்படின்னு. நெக்ஸ்ட் வந்து இஃப் இட் இஸ் லைக் இப்போயும் வந்து கிடைக்கல அப்படின்னா த நெக்ஸ்ட் ஸ்டெப் யூ கேன் கோ இஸ் லைக் 507, தட் இஸ் 507 இல்லை 707. சரி, ஐ எம் வெரி பேட் அட் மேத். ஓகே ஓகே, டிஸ்க்ளைமர் ஆஃப் ஒப்பீனியன் கொடுத்துடும். ஓகேவா? தட்ஸ் ஆல் மேம். அண்ட் வென் தி என்ன சொல்கிறது ரிட்டன் ரெப்ரசன்டேஷன் ஷுட் பி கிவன்னா லைக் பிஃபோர் த ஆடிட் ரிப்போர்ட், அவ்வளோதான். ஓகே ஓகே மேம்.
You understood? Yes, she actually explained very well. She took time, she told examples also, and she explained very well. Very, very good. Now, next is what? We'll go to next standard. Yes, you got a break, right, when she explained. You got a break. Yes. You want a break? Small break? 10-minute break. We'll meet again at 8:45 sharp. 45 minutes. I'll do a brief of the next standard and then we. Okay, 8:45 sharp. 10-minute break. Here, next standard, I'll give an introduction for SA 520, which is analytical procedures. SA 520, analytical procedures. Can you all tell the name and number 5 times? Coming now only. So what is the meaning of analytical procedures? What is the meaning of analytical procedures? You are finding some kind of a relationship between financial and non-financial data. What kind of relationships can you find between financial and non-financial data? See here, Excel will come here. I think Excel writing is better, otherwise you will not understand the numbers. You can see, yes? Okay. Now 2017, what happened? You can see. Now we are in 2024, correct? This is the data you have for sales figures. For sales. 2017, 1 lakh. After that, every year, 20% increase. Is it correct? Yes, after that, every year 20% increase. This is for OYO rooms. This is for OYO rooms. Is this data correct? Is this data correct? All of you, OYO rooms is having one room somewhere in Roypeta. OYO rooms in 2017 it had 1 lakh, 2018 1 lakh 20,000, 2019 1 lakh 44,000. Every year there is a 20% increase. 20% increase. Is this data correct? Can somebody tell me? Can somebody tell me, is this data correct or wrong? Just by looking this data of OYO rooms, can you tell is this data correct or wrong? How many of you are saying correct? I want reason for both. How many of you saying wrong? No one has any kind of opinion. What kind of auditors are you all? What report will you give for this? You have to have some kind of an opinion, correct? You have to either say this data is correct or this data is wrong. Yes? Clear? What? You have only this data. Sale is 2017, 18, 19, 20, 21, 22, 23, 24. Okay, I will tell you this data is wrong. Why? Can anyone tell me why? Why this data is wrong? Why? 20% increase year on year for OYO rooms from 2017 to 2024. I am saying this is wrong. You tell me the reason for this. Shall I tell you exactly which year is wrong? This 2 years, exactly, definitely wrong. COVID. I already gave you this example, same OYO rooms example, and purposely I took the same example of OYO rooms and I told you year on year 20% increase, but here 2020 last 3 months it came around November, December time, so Jan to March no sales, so there should be some reduction in sales, and 2021 it should definitely be close to zero, correct? Everything changed off. 2021 should definitely be close to zero. Yes, only then you will rely on this financial statements which is given to you. Otherwise, straight away you know that this year is wrong. You will not believe anything which is given in 2024 because 2021 you have doubts because that year is COVID year. COVID year. How will anybody go to an OYO room sitting in Roypeta? Will anyone risk their life and go to OYO room? No one will go. Tourism industry itself is not there. Hospitality was not there. So 2021, you know this is wrong. What did we do here? How were you able to tell that 2021 is definitely wrong? How were you able to tell this information is wrong? Based on something called as industry trends. You know that the entire industry was falling. If you go to Google and type industry sales, hospitality industry sales, year on year pathana, all these years it will be increasing. Here definitely it would have reduced and again increase from here. Correct? Increase from here. You will see that the entire industry 2021 it has reduced. So for this company also you are saying it will reduce. So here you are trying to have some kind of a relationship with the industry and you are able to say that something is wrong with the financial statements. This is called as analytical procedure. You are trying to compare the information in your hand with the information of the industry, that is called as analytical procedure. Are you clear? Now, same way, now leave the year and all you leave, or I will just put year 1, year 2, year 3 and year 4, 4 years enough. Now come out of COVID and all, okay? Now sales is 100, 120, 15 and 200. Which one is wrong? Which one is wrong? This is wrong. This is supposed to be what? 150. 10 is missed here. But at the look of it, you are able to tell that this is wrong because why? Prior period is showing that it is increasing at some rate, increasing rate or some rate, it is increasing and suddenly there is a 15. So you know there is a 0 missed here. So you are comparing the information with similar prior period data and you are able to tell that something is wrong with this figure. This is also analytical procedure. Are you guys clear? Yes. Now listen to this. Same year 1, year 2, year 3, year 4 will take. No COVID and all, come out of that. Now, client has been having a sale of 0, 10,000, 1 lakh and 5 lakhs. Marketing expense, he has been doing 0, 10,000, 50,000 and 1 lakh. Is this data correct? Is this data correct? Only see this. Is this data correct? Sale has been increasing at a very good rate. Why it is increasing? Marketing also they did not do first year, so sale was 0. Marketing little bit they did, so they were able to break even. 10,000 marketing போட்டு 10,000 sale பண்ணா, decent value. Second year 50,000 rupees marketing la போட்டு 1 lakh sale பண்ணான். Third year 1 lakh marketing la போட்டு 5 lakhs he was able to make a sale. Is this convincing for you? Convincing? Yes, everybody convincing? Yes, this data is correct. You are able to say data is correct with what? With another item in the financial statements, you are comparing and you are able to say that this data is correct. Correct? Yes, clear? Or imagine government grant. He got a government grant of 2 crores. And his sale 0, 10,000. Same 10,000 for all 4 years. In the second year, he got a government grant of 2 crores. Do you know that something is wrong here? Do you know that something is wrong here? Yes, government grant வாங்கியிருக்கான். அப்ப நீ இதுக்கு யூஸ் பண்ணலனா நீ எதுக்காக யூஸ் பண்ணிருக்க அந்த grant? எதனால உன் சேல் இன்க்ரீஸே ஆகல? Or for what have you used this grant for which you have received from the government? Have you used it for personal purposes? You will be able to ask those questions and all. So this is one transaction. This is another transaction in your financial statements. You are getting some kind of a relationship between these two transactions and you are able to tell whether that is right or wrong. Are you understanding? Yes? Now listen to the next example. I have a factory. My factory is 1,500 square feet. With this 1,500 square feet of factory, I am making a sale of 1 lakh. I am making a sale of 1 lakh with this 1,500 square feet. Next year, I have increased my square feet to 3,000 square feet. I have doubled it. Still my sale is 1 lakh. Next year, again another 1,500 I increase. 4,500 square feet I am operating. Still my sale is 1 lakh. Is there something wrong or is everything okay? See only this. Don't leave the others. Only see this. Square feet and sales. Is there something wrong or is everything okay? All of you. Something wrong. He's been expanding his square feet but sale. It is not even touching, not even a single rupee has been increased. So here, even though the square feet is not your financial data, this is a non-financial data, correct? It is a non-financial data, but still you are finding some relationship with your financial information which you have in hand. This is also called as analytical procedures. Are you clear? Yes? Next. Sales is 1 lakh. Sale is increasing at an increasing rate. Same as this formula, correct? Increasing at a increasing rate for 1, 2, 3, 4, 5 years. Gross profit 20,000. Consistent. What is your GP ratio? What is the formula? Formula for GP ratio. Gross profit ratio. Gross profit by sales, correct? Gross profit by sales. So as an auditor, you went and you did this ratio. Gross profit by sale ratio. What happened? What happened? Even though your sales increased, your gross profit is remaining the same, so your ratio is decreasing. Do you know something is wrong here? Are you finding out that something is wrong here? Yes, you will be able to ask the management as to why your ratio is reducing. So here you are doing something called as ratio analysis and you are trying to find some kind of a relationship between data and you are able to tell whether this is right or wrong, or you are able to ask the management for further questions. This is also called as analytical procedures. Analytical procedures means it is comparison of client data with 5 things. First one is industry data. Industry data, we saw OYO rules. The whole industry fell in 2021. How can you be increasing at the same rate you've been increasing before also? So the first one is comparison of the client data with the industry data. The second one, what we did, you are able to say this is not 15, it is 150 because you compared it with the previous years. So comparison of the client data with similar prior period data, that is also analytical procedures. That is the second one. Third one, comparison of client data with client expected results. That means நான் மார்க்கெட்டிங்க்கு இவ்வளோ இன்க்ரீஸ் பண்ணிட்டே போறேன், அதனால my sale will increase னு client எக்ஸ்பெக்ட் பண்ணுவான், and auditor will be able to check whether the client's expectation has been met or not. Client has expected 1 lakh நான் மார்க்கெட்டிங்ல இன்க்ரீஸ் பண்ணேன்னா சேல்ஸ் 5 lakhs ஆகும் அப்படின்னு he has expected. That's why he'll put 1 lakh in marketing, correct? Otherwise he's not a fool to keep putting marketing expenses. So this is client expected results. So whatever the client is expecting, whether that is happening or not, auditor will check. Are you clear? Say marketing expense client expected 50,000, he put 1 lakh inga varla, 10,000 da varudhu, correct? 1 year he expected and he did not achieve the target. 1 year panna it is okay, you can experiment. Year on year, either 50,000 is becoming 1 lakh, 1 lakh is becoming 2 lakhs, 2 lakhs is becoming 4 lakhs. But if sales is remaining the same, then what is happening? Client is expecting something else, but financial statements is expecting something else. So auditor will be in a position to ask the client as to why you did that marketing expense. Okay, you are expecting 1 year, you expected 2 years, you expected 10 years, will you keep expecting and doing some stupid expense? That is not possible, correct? So here you are comparing the data which is given by the client with some expectation which is determined by the client itself. Are you clear? The fourth, this is the third one, correct? The fourth one is talking about you are comparing the client data with the client expected data non-financially. Client is expecting to increase the sale, that's why he is increasing his square feet. The square feet is a non-financial data. So you are comparing what? The client data with client's expectation with the non-financial data. So he is increasing his square feet, means sales also will increase. But if it is not happening, you know it is a red flag. You know you have to ask him. Are you clear? The last one is ratios. Ratios normally who will do? Auditor only will do all these ratio analysis. So this is auditor determined expected results. So you are comparing the client data with auditor determined expected results. That means what? Auditor is expecting that sale has increased, means gross profit will also increase. The GP ratio will be same. Are you understanding? Yes. So auditor has expected that the GP ratio for this company is 20%. If it is 19 or 18 or 21, 22, it's fine. 2% above or less, it is okay. But if it is falling 4%, again falling to another 4%, again falling to 3%, here I know something is wrong. My gross profit margin can't keep falling. Are you understanding? So here auditor knows that something is wrong by comparing some kind of a ratio analysis. I have compared for the previous year and I am able to tell that something is wrong. This is called as analytical procedures. The meaning of analytical procedures is evaluation of financial information. I am evaluating my client data of the financial information. How am I evaluating? Through finding relationships between financial and non-financial data. Here they will use one word called plausible relationships. Plausible relationships between financial and non-financial data. What is the meaning of plausible? Don't think too much and all. Plausible only means possible. Whatever is possible, whatever relationship is possible, you do all those relationships, then you will be able to tell whether it is correct or wrong, whether the client data is correct or wrong. So what is analytical procedures? It is the evaluation of financial information through analysis of plausible relationships between financial and non-financial data. Are you guys clear till here? Yes. What are the 5 types of analytical procedures we can do? 5 types. First one is comparison of client data with the industry data. Second one is comparison of the client data with the prior period, similar prior period data. Third is comparison of the client data with the client determined expected results. In marketing pandrena, I am expecting a result of increase in sales. So client determined expected results. Fourth is comparison of client data with the client determined expected results for non-financial transactions. Here square feet increase panna, it is a non-financial item, but still I am finding a relationship with sales. I am expecting a increase in sale. Here sale is constant, but my square feet is increasing. So the auditor knows that. For what expectation have you increased the square feet? For sale expectation only, increase in sale. But why is this not increasing? You are able to ask questions to the manager. What is the fifth one? Comparison of the client data with the auditor determined expected results. Auditor will have lots of graphical representations going on in his head, ratios going on in his head. So he knows that gross profit in this industry is 20%, and on year 1 also they have showed a 20%. So he knows gross profit is 20%, means he will try to understand why the increase in sale is not affecting the gross profit. Are you clear? Yes. Are you all clear till here? These are the 5 types of analytical procedures. Now coming to techniques. What are the techniques of analytical procedure? What and all as an auditor we can do? The first one we already did, gross profit ratio. What is this called? This is called as ratio analysis. Inventory turnover ratio, gross profit ratio, net profit ratio, capital reserve ratio, all these things are called ratio analysis. Are you clear? This is called as ratio analysis. The second one, this one we did. Previous year so much, next year increased by 20%, so next year increased by 20%, so next year increased by how much percentage? How much percentage? 20%. You are able to tell with the past trend, correct? With the prior period information, you are able to tell this year also it will increase by 20% only. This is called as trend analysis. With the past trend, you are able to tell this only will happen this year also. This is called as trend analysis. Now here, see this example. Your debtors is of 1 lakh, guys. Your debtors is of 1 lakh. Previous year debtor is 1 lakh. Opening balance of debtor is 1 lakh. Sale in the year is 2 lakhs. This is opening balance debtor I am saying. 1 lakh. Sale in the year is 2 lakhs. Closing balance debtor. This is not writing. Closing balance debtor is 10 lakhs. All of you okay? Okay? This is okay? How is this okay? Why is this not okay? Who and all are saying this is okay? This is correct. Who and all are saying this is correct? Nobody is saying this is correct. Why is this not correct? Sale itself is only 2 lakhs. How can your debtors increase by 9 lakhs? You have that doubt? இந்த வருஷம் சேலே 2 லட்சம் தான், உன்னோட ஓப்பனிங் பேலன்ஸ் 1 லட்சம் டெட்டார் இருந்தது, மேக்ஸிமம் it can increase to 3 lakhs. How did your debtors become 10 lakhs? You have a question mark. Yes, what did you do here? Why were you able to say that this is wrong? What did you do here? You did something called as reasonableness test. நியாயமா நீ சொல்லணும்ல, நியாயமா நீ 3 லட்சம் வரைக்கும் நீ ஃப்ராட் பண்ணலாம், நியாயமா நீ சொல்லாம 10 லட்சம் உனக்கு டெட்டார்ஸ் சொன்னா it is not reasonable. You have to be reasonable when you are telling some lie at least. So this is called as reasonableness test. You are able to tell, you just didn't know the word for that, correct? You are able to say that this debtors figure is wrong or that sales figure is wrong. One of that is wrong, you were able to tell. Correct? You did something called a reasonableness test. If a sale increased only by 2 lakhs for the year, debtor also maximum can increase only by 2 lakhs for the year. It cannot be more than 2 lakhs. Correct? So as an auditor, by the look of the financial statements, you will be able to say that this 10 lakh figure is wrong because you did this reasonableness test. Are you clear? Now, next is called as structural modeling. Structural modeling. This is nothing but, only name is like this. What you will be doing is, you will be putting a graph. In your head itself, you will be putting a graph. If sale is 0, you will plot it here. Correct? If sale is 0, automatically in your head, you will plot it here. Next year, sale is here. Next year, sale is here. Next year, sale is here. Next year here, next year here, next year here, next year here. Where will it be next year? In the same place here. Correct? So what did you do? You tried to create a pattern based on the previous trend. This is the same as trend analysis. This is the same as trend analysis, just in graphical format. That's all. Nee previous trend da neenga follow pandra and you're saying this dot also will be on top. Say this graph is like this. This graph is like this. 1, 2, 3, 4, 5 years is here. Where will you put the dot for the 6th year? Here, linear. Linearly, you will put the dot for the 6th year. So, this is also trend analysis, but in graphical format. This is called as structural modeling. This is called as structural modeling. Here, you will have a linear regression. If it is like this, you are making an assumption. If it is going in a curvy way, you know that it will again go up here. You are making that assumption in your head. This graphical format is called as structural modeling. Now, these 4, the last 4 I told was techniques. The first 5 I told was types of analytical procedures. What are the techniques? 4 techniques of analytical procedures are ratio analysis, trend analysis, reasonableness test, and structural modeling. These 4 are called the techniques. Types na comparing the client data with industry, client determined expected results, auditor determined expected results, and all of things are called types. Understood? Now, I will be doing my audit procedures as an auditor for doing the analytical procedures. Correct? For everything I have to have audit procedures. Correct? So, what and all will I have in my audit procedures? So, first I have to check something called as suitability. What is the meaning of suitability? This namakku thevaya illaya, whether this is required or not, whether this information can it go through analytical procedures. Marketing is definitely I have a direct relationship with sales. Yes, square feet is a direct relationship with sales. There will be some figures which does not have reserves and surplus. No, how will you do? What will you do with this reserves and surplus? Can you do some analytical procedures for this? Creditors, debtors, all of those things you can do analytical procedures. So first thing you have to check is you have to determine the suitability. Second, he has given you information like this. He has given you this is the information given. See the green color dabba. This is the information given. Now you know that this information is not correct. Correct now? Sales cannot be the same when square feet is increasing. You know that this information is not correct. If information is not correct, can you keep doing analytical procedures on top of that? If information which the management has given itself is not correct, you cannot do analytical procedures on top of that information. So second thing you have to check is whether the information given is reliable or not. அவன் கொடுத்திருக்கிற financial statements full தப்புனா, there is no use of doing these ratio analysis, trend analysis, graphical representation and all of that. Third, when you are doing this analytical procedure, you are having some expectation. You are developing some kind of a expectation. Here, auditor determined expected results. What was your expectation here for 1,20,000? What was your expectation here? 20%, correct? So you expected a gross profit of 24,000, but gross profit was only 20,000 here. So here what happened? You developed the expectation and then you checked the results. So first you will check whether it is suitable, whether you can do the analytical procedure. Second, whatever information they have given, whether it is reliable or not. Third, you are developing some kind of expectation. Here your expectation is 24,000. Here your expectation is 24,000. But what has happened? It has come to 20,000. So when you are developing an expectation itself, you have to determine the acceptable level of difference. What is the acceptable level of difference? Till 2,000 rupees I can accept. Till 2,000 rupees I can accept. This is my acceptable level of difference. But here what is happening? 4,000 is the difference. So here I should not accept. Are you clear? Here how much will come? Here 28,800. But how much gross profit has come? 20,000. What is the difference? More than 8,000 rupees. So what happened here? My acceptable level is only 2,000, but more than 8,000 has come. So I know something is wrong with the financial statement. Are you clear? So fourth here, what are the audit procedures I will be doing? I have to determine the acceptable level of difference. So these four are the audit procedures which the auditor has to do for SA 520 analytical procedures. Are you clear, guys? First, I will determine the suitability. I will evaluate the reliability. I will develop some kind of expectation. Fourth, I will know that this much difference is acceptable for me. So, I have to determine the acceptable level of difference. Are you clear? Three things we saw for this standard SA 520. The first one is, what are the 5 types of analytical procedures? What are the 5 types? Comparison of client data with industry data, comparison of client data with client determined expected results, comparison of similar prior period data, so comparison of client data with client determined expected results, comparison of client data with client determined expected results about non-financial data, comparison of client data with auditor determined expected results. Are these examples coming into your head when you are saying each and every sentence? Yes. Next we saw what are the techniques of analytical procedures. There are 4 techniques. The first one is ratio analysis. Second, trend analysis. Third is reasonableness test. A debtor example we saw for reasonableness test. Fourth is structural modeling, which is nothing but graphical representation of the trend analysis. What are the audit procedures that the auditor has to do? There are 4 points. First one is determine the suitability. Second, reliability. The information the auditor gets must be first reliable. Third is expectation. What are the expectations which the auditor is developing? Fourth one is what is the acceptable difference? These 4. Can we wind up, guys? We'll continue with SA 520 tomorrow and also go to the next standard. Yes, 5:30 we'll do, or we'll do Caro, depending on your energy levels. Okay, guys. See you guys tomorrow. Have a nice day.